Hi, I'm Michael Newrock, and welcome to the training lesson Trends Within Trends. Now, this is the first lesson in the course that's really starting to get more meaty, if you like, more into the details. Up until now, it's been pretty basic preliminary stuff that's important to understand and know, obviously. So, this is a baby steps, one, two, three, step-by-step process to get you from a total newbie right through to a professional profiteer trader. So in this lesson, we're going to cover some more details about trends within trends because this is really the heart of both trend trades and swing within trend trades. So as a natural consequence of trends, the market can produce a huge array of possibilities of trends occurring in multiple time frames. So what that means is that the market is complex and that different time frames provide us different perspectives of what the market is doing. What we're looking for ultimately is an alignment of um, or an alignment of trends within trends. So what we're looking for is a setup opportunity, the perfect, idealistic trade setup opportunity that represents a trend within a trend. Even better, a trend within a trend within a trend. In fact, there are 9 time frames typically represented in trading platforms, and they are the M1, the 1 minute time frame. Every bar is 1 minute. The M5, which is the 5 minute time frame, so every bar or candle represents 5 minutes. The M15 representing 15 minutes for every bar or candle. The M30, the 30 minute. The H1, the 1 hour time frame, every bar or candle representing 1 hour. The H4 representing a 4 hour bar or candle. Bar or candle, it doesn't matter. That's just a representation on the chart. But the time frame is the same. So H4 representing a 4 hour bar or candle. Uh, the D1 representing a daily bar or candle. So every bar on that time frame would represent 1 day. Therefore, you would only get a new bar or candle um, every 24 hours, so one a day. And then the W1, the weekly time frame. And when you're getting up to this level, very few traders, particularly in the retail trading environment, are really looking or even aware or bothered to really assess that time frame, the weekly time frame. But it is significantly important uh, as far as understanding what the real trend is. Because whatever's happening on the shorter time frames, the 1 minute, the 5 minute, the 15 minute, 1 hour, even through to the 4 hour, is not possibly the same as what's happening in the weekly time frame, or even the daily for that matter. And then finally, we've got the MN1, which represents a monthly time frame. Every bar or candle is 1 month, so there's only a new bar every month. So they're the different time frames, and what we're looking for ideally is a trade opportunity in the shorter time frames that are in alignment with the higher time frames. So therefore, there can be trends that are 9 levels in total. That is the 1 minute trending within, like for example, the 1 minute trending within the 5 minute, that's trending within the 15 minute, that's trending within the 30 minute, and so on. So we will be focusing on using a short trading time frame, such as the 5 minute, the 15 minute, the 30 minute, or the 1 hour within the 3 higher time frames, the 4 hour, the daily, and the weekly. And in the previous lesson, we went over the higher time frame indicator, which gives us the 4 hour daily and weekly by default trend and swings. So these are really important for the fact that when we get a consensus on those higher time frames in a particular direction, that's what we should be looking for in as far as a trade entry in line with that direction. So other than consolidation periods in which no real trend exists, each time frame has an inherent trend at any particular time. It also has an inherent swing that is either in favor of the trend or opposed to it. And again, that's what's represented on whatever time frame we choose to trade on the Profiteer chart, with the trend and swing of those three higher time frames. In the weekly charts displayed in the previous lesson on trends, we can see momentum rallies or falls in the direction of the overall trend direction. It's in these periods that reveal multi-trend setups with an alignment direction in multiple time frames. So, in other words, within the weekly trend, when it is at its strongest, we can typically find a daily trend as well as a 4-hour trend, as well as a 1-hour trend, and the shorter 30-minute, 15-minute, 5 minutes, all in line with the overall weekly trend direction. It's these strong alignments that we seek because they represent trades that are high probability entry points with the momentum to achieve a profitable position very quickly, as well as having the potential to generate big gains. So in other words, you might be trading the 5-minute, the 15-minute. If I'm trading a shorter time frame, I usually trade no lower than a 15-minute, but a 15-minute or a 1-hour. But I'm at the same time, in a sense, trading a daily or a weekly time frame. So therefore, I have the liberty, the luxury to be able to put in just a small stop on that trade entry at those shorter time frames, say the 15-minute or the 1-hour or even the 4-hour, but have the potential for a much bigger reward because my trade is in alignment with, say, the daily and the weekly higher time frames, preferably both. The following chart is the daily time frame of the dollar yen, including the weekly chart as an insert. So you can see that within the greater, bigger trend, we had trends in the shorter time frame. So here's the weekly chart insert here that we looked at in the trends lesson. And this here is what we're seeing here on the daily charts. And right here we can see the original trend line, which is this one over here, of the weekly. Like looking through a microscope, the shorter time frames are revealed at their strongest point where all or a majority of trends are in perfect alignment. It is these entry points that we seek and why it is important to understand trends and multi-trends. This chart is a 4-hour chart of the same pair, the dollar yen. It shows a 4-hour trend. Okay, so you've got your 4-hour trend within the daily trend, within the weekly trend. So here's the 4-hour trend, and that's represented within here as far as being within the daily trend, which is in itself within the weekly trend. So 4-hour within the daily, within the weekly. And here, this line here, is a rally within the 4-hour trend. And you can see them in different places. So on the following chart is a 1-hour chart of the same pair, the dollar yen, so the same time period. It shows a 1-hour trend, that's this image here, with the 1-hour trend here, within the 4-hour trend, within the daily, within the weekly. Okay, so here's the 1-hour trend. Okay, you can see pivot lows higher than the previous pivot lows, forming that trend line. Within here's the 4-hour, because it's from the same chart, the 4-hour trend, which is within the daily, within the weekly. So 1 hour within the 4-hour, within the daily, within the weekly. And you can see within this 1 hour, there's a rally within the 1 hour trend. So that's the whole idea, and really the essence of Trend Profiteer, whether it's a trend or a swing within a trend trade. You're really looking for those opportunistic moments that are idealistic in nature, perfect time to get in. Obviously, it doesn't always work out, and that's with any trading system, but it provides us with high probability, low risk, high return trades, setup opportunities. So this rally represented a strong move, and as we zoom in on the shorter time frames, we can continue to find more trends. It is these setups that we are looking for that form in the direction of the higher time frames. So if we kept on looking, we would have found a 30-minute trend within the 1 hour, a 15-minute within the 30, and so on. Five within the 15, within the 30, within the 1 hour, within the 4 hour, within the daily, within the weekly. Of course, it's not as clear cut as that. And the lower you go down or the shorter time frames you use, you can expect more of a uh, argy-bargy zigzagging around. You're not going to get um, perfect movements with all your trade setups all the time. Sometimes it does happen, and boom, it just never goes against you. But other times, it's not going to go. So what I'm trying to say is, if you're trading, if you're a newbie, or even if you're experienced trader, uh, the higher the time frame, the more stable the trade is. There's other things to it. You need to make allowances for bigger stops, but at the same time, you have even bigger returns. But the stability is stronger on, say, a 1 hour or a 4 hour, which is my favorite time frame because it's nice and slow, but allows me to catch big ones. But if you want to delve into those 1 hour and those 15-minute trades, they particularly work well with the higher time frames, and they allow you to be able to take more trades, of being able to get into the market and get out of the market, but all within the concept of trading within trends within trends within trends. So I hope that makes sense. There's a whole heap of examples. We're going to go over the rules of the system in depth, but also go over a bunch of examples. Have a look at the live trades as well that are uploaded in the members area, and of course the weekly webinars are invaluable for many people, and great opportunity for us to look at the market in real time and be able to ask questions. And under this lesson, we've got the ability to download this video, a special report that goes with this lesson, so you can print it out or just view it in PDF on your computer and just go over these concepts a little bit more. A couple of tasks for you to do that I've listed, and also some FAQs, plus a link straight to this section of where we'll be dealing with trends within trends in the forum. So all questions, feedback appreciated. Love to see participation in the forum, and of course the chat room. Being able to spot those opportunities is really exciting. So I look forward to seeing you in the chat room as well. Till next time, good trading, live well, and I'll see you soon.